Hello and welcome once again to another episode of In Orbit. It's the podcast that looks how technology in space is helping us down here on planet Earth. Now, normally on the show we talk about engineering, or we talk about technology, we talk about science, but today is all about following the money. We're going to be talking about space and investment. How does that all work? Thank you very much. Well, welcome everyone. Welcome to the studio. Thank you very much for joining me in orbit, as it were. We'll do a few introductions. First of all, to my right, to the far right, we've got Nayen Pankhania from the Satellite Applications Catapult. Just upstairs, I think, is your office.
That's right.
Do you have an office here?
Just upstairs, that's right.
Okay, so well, thank you for making it all the way downstairs. We have next to me, we've got Shruti Iyengar from Future Planets Capital. And to my right, we've got Manjari Chandran-Ramesh from Amadeus Capital. And then it's got, in my notes, it's got /NED, and I don't know what that is.
So I've recently joined as the non-executive director.
That's what it means. Okay.
Satellite Applications Catapult.
That's nice. So you're the non-executive director?
One of many.
What does that mean? Does that mean more work or less work?
Oh, it obviously means more work.
Does it? Yeah, okay.
But it's fun work.
Is it?
Yes, of course.
Okay. Actually, well, why don't we, let's go around the room and just explain a little bit what we do. So Amadeus Capital, first of all, what's your main function there? What do you do?
Yeah, sure. So Amadeus Capital Partners is a global technology investor that has been investing in deep tech for the last 29 years now.
What was deep tech 29 years ago?
Yes,
what were you guys investing in
question.
30 years ago?
The basis for Apple City was one of our investments.
So basically, since the kind of beginning of the internet, as it were, 30 years.
Yeah, our first AI investment, I think, was in 1999. So
really? Oh, okay.
Yeah,
there we go. So
we've invested like over $1 billion, I think it's 1.2 billion, into 190 companies, and more importantly, we've exited 100 of those. So we've actually seen the whole life cycle.
Brilliant. Okay. And as a non-executive director here,
yes,
why have they brought you in?
So I think what I was told by the team was they would like to get some investor perspective on the Satellite Applications Catapult, because they work so closely with the startup community. And so they asked me, and I said, "Oh, this is a fantastic opportunity."
Yeah. Well, we're going to talk about why it's exciting and why it's a fantastic opportunity. Shruti, tell me, Future Planet Capital. That sounds suitably spacey. It's got the word planet in it, so it must be kind of spacey.
Yeah, and impacty. I guess that's the
spacey,
investee.
Yeah. Perfect. Actually, that could be kind of like a shield with investee, spacey.
Impacty. Yeah.
Impacty. That'd be good.
So we're Future Planet Capital has been around since about 2016-17. We're an impact investing firm, so we invest in companies across various stages that create positive impact on the planet and people's health. There are lots of sectors we invest in. We've got lots of different funds, but the specific fund, I guess, that I spend a lot of my time on is the UK Innovation and Science Seed Fund.
Seed Fund, okay.
Yeah.
Okay. Tell me about that.
One more acronym, which is UKI2S, is what we call it.
You love an acronym.
Yeah.
We love acronyms in this. Okay.
Space is filled with acronyms, isn't it? Yeah, so we're a 110 plus mil fund. We invest into early stage deep tech companies based all in the UK across various sectors. I lead our space sub-fund within it. But yeah, we invest into things like fusion energy, engineering biology. Yeah.
These are the big topics, aren't they? Fusion, space, AI, et cetera, et cetera. We're going to come and explore some of these areas in a moment. Nayen, from the office upstairs, just tell us your role here at the Satellite Applications Catapult.
Sure. So I'm the Investment and Strategic Finance Director at the Catapult, which is a rather grand title for a role which focuses on how we can get more capital into high potential businesses in the space sector, and also working with colleagues in the Catapult to increase the number of those businesses that are investable.
That sounds massively grown up.
It's like a real job.
That's like proper job.
But it's super important. It's how we're going to get the sector to grow and how we're going to have an impact on the UK economy. Okay,
that's a good place to start, actually. I have to point out at this point, I'm sort of happy talking about the science and space and engineering. investing is a complete mystery to me. Like, I know nothing about investment, and I'm absolutely fascinated to sort of learn a little bit more about how it all works. I thought perhaps we could start by just getting a sense of what the kind of investment landscape looks like in the UK at the moment. When we talk about the space sector, what do we actually mean from a sort of investor's point of view?
So in terms of size, I can chime in on that. So the size and health of the UK space sector was a report published in the last couple of years. UK space industry income is about £19 billion. So it's not the biggest, but it's growing, and I think it's been growing around 3%.
19 billion sounds like a hefty chunk of money.
It is, and it isn't, because the difference with the space sector is that it's highly government funded.
Right.
As compared to, if you go to the financial services, you've got really large corporates being, nearly 90% of that.
Yeah, okay.
Whereas in the space sector, it's almost flipped. You have large corporates, don't get me wrong.
Yeah.
But it's nowhere near what it is in the financial services. And largely a lot of that money comes from, the European Space Agency or the UK space agencies or space agencies as a whole across the world.
Well, that makes sense. It does seem to be, though, that's kind of changing. I mean, it seems to be a sort of shift the last sort of decade or so. Access to space is obviously now becoming more commercialized. It's becoming cheaper. There's all these startups that we see, and that seems to be changing a little bit.
I mean, it's only been around for 10 years in it's current form.
Yeah.
So new space, when we think about sort of shoebox-sized satellites and launch from companies like SpaceX, that is really it's about the same length as the age of the catapult, right? So in that period, a hell of a lot has changed, and a lot of it has been driven by actually the kind of components you see in your phone. So the miniaturization of phone components has led to smaller satellites and therefore more in orbit.
Yeah. I mean, one of the things I always think about is that pretty much all civilization now is pretty much dependent on stuff that we do in space, stuff that, day to day we might not think about. So presumably this is a growing sector.
Largely, yeah. Yeah, I'd say it's probably been one of the more resilient sectors in the last 2 years, especially when you look at it from like an investment perspective. So venture capital funding as a space, I think, as a market, has had a bit of a difficult time in the last sort of year plus. We're coming off sort of a high of post-COVID when we had lots of deals happen, lots of investments, and then in the last sort of 12 months, you've seen a lot of those investments not sort of survive, and then you've seen sort of funds double down on their own portfolio companies instead of making a lot of new investments. Mm-hmm. So you see the impact across a couple of other sectors, but when you look at the space sector, you can see a lot more sort of an incline and an increasing amount of investments.
Why is that? Is it sort of dependent on global politics, or what is it? What's making it go up and down?
Yeah, I think everyone's got a hypothesis, right? I think.
What's your hypothesis?
I have to be very clear, it's my hypothesis. It's a couple of different things, but the most recent would probably be just the way the geopolitical landscape is moving. So space defense has become a very hot topic.
I was going to say, that's kind of a thing that springs to mind.
Yeah. And then there's, of course, the other piece of it, which is all things space for climate.
Right.
So I think those are sort of two, I would say, the key drivers for people's increased interest and increased understanding even, right, of what it means to be a space tech company.
Yeah. How does the space sector differ from other tech companies? If you deal across the sort of tech sector, what do you call it? Deep tech.
Yes, exactly, deep tech. So I mean, we've done everything from photonics and quantum and AI to novel materials, med tech, and amidst all of that, we also do space tech. So Amadeus as a firm has invested in companies like Okapi or Atmos out in Europe. So it's definitely a sector that we are very much tracking and trying to see where we can make money for our own shareholders and support the ecosystem and these exciting founders.
Is it different because does it behave differently because there is so much government input and because you're dealing with kind of longer, I guess space stuff takes longer to develop perhaps? Or?
I think it's a multitude of things. So firstly, yes, the government side of things, but also if you compare it with other technologies, there is a path where you can, sort of say, okay, this is the value proposition. This is going to be the product market fit that you can actually achieve. But it's still unclear how the company is going to make money, what's actually going to be the business model.
That's really good. Thank you. I was about to come on to that. Sorry, Nayen.
I mean, there's a parallel actually. So yes, there's a lot of upfront capex. There are long lead times as well, the deep tech. But if you think of an industry like life sciences, for example, that's not that dissimilar in the sense that you have R&D upfront, you have long lead times, but it's had time to evolve to the point where investors know what the exit strategy is.
Right.
So a lot of the time you will sell to a large pharmaceutical company. So investors are comfortable with what the exit is. That doesn't quite exist for space yet in the same way.
Is that just good? There's so much unknowns. It's still a little bit amorphous. I suppose, how does the space sector generate revenue? Like, what's the product at the end of it?
This is actually the problem, right? Like, so I meet companies that, sort of say, oh, we work with Earth observability, and, I'm looking at helping farmers do a better job with their satellite images because I'm using machine learning on that. And, that's very exciting that actually satellite images are being used in that manner. But it sort of then starts to come down to what problem are you trying to solve? Do you have the resolution that you need to be able to solve that problem? Who's going to pay for that? It's great that you want to help the agri-tech market, but are, sort of farmers feeling that pain that you're actually solving to want to pay? So that's just, sort of one example where how does it all then flow? We speak about capital, but ultimately the capital, the upfront investment needs to result in revenues. And I think there is a little bit of a lag currently with the space.
I think, and just to add briefly, I think it's a market that's still forming, right? So in many space domains, the supply and demand are not actually well established. So you're trying to build a product or a service whilst the demand is unclear.
Yeah,
that's actually a very difficult.
The product is unclear.
And the product is unclear. So if you take Starlink, for example, that was a direct-to-mobile satellite comms business before there was any real demand. It was set up long before there was established demand. But now the demand is there. It's the number one player.
That's really interesting. Yeah, and I have it. It's really good.
Like Manjari was saying earlier, the space. If you look at where a lot of the revenue currently comes from for a lot of space companies, it is government contracts.
Right.
So you're still figuring out what a private sort of commercial business model will look like with many of these companies. And so, there's interest because you're generating revenue, but then for a VC investor who's looking at, especially if you have
VC meaning
venture capital.
Thank you.
Sorry.
No, it's okay.
For a venture capital investor who's looking at it from like a time-bound sort of nature, where I'm saying, okay, I've got a 10-year fund, I want to exit in this time, what multiple will I look at when I exit? How much will this be worth, right? Yeah. And I work backwards to say, how much will you make as a company? But then that's when the unit economics kind of start to break down, and you can't work out a cost-benefit analysis because either the customer doesn't clearly know what they need, the end customer. So let's talk about, as an example, manufacturing pharma in orbit, right?
Drugs and things.
Drugs in orbit, yeah. Does your end customer know, and have you spoken to your end customer? Are they willing to pay, and will you charge a premium? So that's kind of where it breaks down, and that's the sort of evolution of the sector so far. But you can see, to Nayen's point about biotech having had so many more years, right? That space will get there one day where we'll be a lot.
I'll give you another example, right? So I've seen companies that are doing the components for satellites or other sort of aspects that you might need. And again, it's super exciting technology. You absolutely want to support the company because it's just such exciting technology. Why would you not want to do it? But then how many people are they going to be able to sell to?
Yeah.
The governments, maybe Starlink, maybe Amazon Kuiper, and that's it.
Yeah.
That's your customer base.
Okay.
Which makes it a very nervous investment for venture capital.
So there's a little bit of sort of twitchy, and is your job here Nayen, is it to sort of clarify to investors, like to sort of paint a clearer picture of how it works and how it's all going to work? And
there are a number of things going on. So one is some investors understand space very well.
Yeah.
So I think present company included in that. Some investors are just for the avoidance of doubt. Sorry,
that's kind of why you're here.
You just had to say it.
I'm so sorry. To distinguish between sort of investors like Shruti and Manjari, more generalist deep tech investors who may not have looked at space before.
Yeah.
So in the sense of they might have done hardware engineering, but they're not looking at space as a sector, and they don't know it very well.
Yeah.
And then I think there's an element of sort of explaining space to them, but also trying to get companies to think more about how they make themselves investable.
Yes.
So what are the things that they need to think about when they go and have a conversation with potential investors that actually makes it an easier proposition than it otherwise would be.
Yeah, an easier sell. Yeah, that's interesting. So as investors in space, what is it that you see that gets you excited?
Oh, I love it when a founder can clearly articulate the problem they're solving and why they're best placed to solve it.
So there you go. There's a classic. That is how to get investment money. Be clear, be simple. What's the problem? How are you going to solve it? That's all we need to know.
Because very often, the other thing is that space tech as an ecosystem today, I think, is filled with really brilliant minds who've come up with super cool technologies, but haven't necessarily validated it. So you haven't actually gone and spoken to a customer or a potential consumer about what their pain point is. And to Manjari's point earlier about, ag tech, does the farmer truly need a resolution that is higher than that? Will the yield increase actually matter if it's 5%, or does it only matter if it's 10%, right? Yeah.
See, in my mind, all I can think of is Dragon's Den now. And people coming, and you guys are sitting there with like a big table with cash on it.
We're nicer. I don't know if we're that rich.
That's what I want to happen. I want you guys to have just like big piles of money, and then poor like nervous people come in.
Oh dear, no. Let's take that image off.
How does it?
But to your point, right? We are what we are called the traditional venture capital, and what that means is we have a very sort of traditional structure: LPGP, 10-year timeline funds.
Wait,
probably
LP. What was that?
Limited partner, general partner structure. Limited partner being your shareholder.
I'm going to pretend I know what all that is, so we'll just crack on.
Of course, right. But more importantly, it's a 10-year timeline fund with the possibility of extensions. But nevertheless, you're trying to work out this timeline of 10 years. There are other structures in venture capital as well, and so I think for the stage at which a founder of a space tech company is, they should really look at what type of investor they should be engaging with for the stage they are working on.
Okay, so what kind of investors are there? So the venture capital investors, which is you guys.
And there are different kinds, like she was saying. So ours is, for instance, an evergreen fund, which would be the other side of a timed fund.
Timed fund.
So a timed fund says, in 10 years, I want to see my money back.
Okay.
An evergreen fund says, when the money comes back, I'll recycle it into the fund.
Oh.
There's a lot more detail to it, but this is the
easy
way
of... Easy is good. I'm happy with
explaining it,
Okay.
And then there's the tax efficient ways. There's the EIS and VCT models, particularly in the UK. So that's another class of investment capital. There's definitely the whole grant side of things.
Government grants.
Government grants, which can hugely help as long as the companies have a real clear view on product roadmap.
Angel investors
initially, yes. So
there's venture debt as well. So if, on certain kinds of terms, they understand venture scalable companies better.
Right.
And, the likes of, I think, HSBC Innovation Banking is pretty well known for venture debt here.
Okay.
So yeah, it's quite a diverse landscape in terms of the types of investors, but it's a different point when you come to like the amount of capital that each investor has for space.
Let's say I'm an investor. What am I looking for what do I want in a space company? What do you want to see from a company that's doing exciting things?
Whether that's space or not, three key elements are always, is this technology one of the best in the world and completely differentiated from anything else out there? Is there a market that's so large that this is going to be hugely disruptive when the product is created? And is there a superstar team? Right? Like those are the three ingredients. that is not different, whether that's a space tech company or any company for that matter, that is venture backable. I think the key thing here is most space tech companies can make that case that it's a large market, but that path to actually achieving even 5% of that large market is hugely unclear right now. So most space tech founders need to find that this is my path to, sort of get 5 or 10% of what's a very large market.
And how do investors assess the value of companies? What's the kind of process of that? You're kind of like, I realize I'm asking like really daft questions.
No,
these
are great.
I just don't know how it works.
These are great.
So a company...
The laughter is from like scars when you've not done it right.
Okay, good. I thought, without going back to my Dragon's Den analogy.
Yeah.
They always kind of overestimate their kind of worth. So how do you guys go, okay, this is what you're actually worth?
I would imagine most funds have similar ways of assessing it. You look at a few benchmarks. The easiest way to do it is you look at a few benchmarks out there. You see whether other companies have raised it and how much they've raised at in a similar, say, subsector, right? If I'm talking EO versus, IOSM. So if I was looking at a certain subsegment, I go, okay, what's another company in recent times that's raised money, similar stage, how much were they valued at? Or the other way to do it sometimes is... The more common way, I think, at the earlier stages, because we operate quite early, is we usually will look at milestones. So what have you achieved and what are you set to achieve in the next 2 years?
Right.
And therefore, what are the points at which your valuation as a company could go up? And do I see someone paying 2x in 2 years for you? For, say, an X amount of money, right? And that's the X that I will value you at today if I think that's feasible.
It also, sort of, again, goes back to where will you ultimately land in terms of the exit, right?
Yeah.
Like if you're going to have this company sell for sort of a worst case scenario for 100 million, then, investing...
That sounds pretty good.
Well, but that's back to the point, right? Like when you want... sort of large companies to do really well, you're really targeting over $1 billion. That's really what you want the enterprise value to be. So 100 million, it's a lot of money, don't get me wrong. But in the venture world, that's probably considered okay.
Okay.
Right? In which case, if you have invested at a valuation of, 20 or 30 million, that's not a lot of multiple back, right, in terms of cash.
No. Maybe I'm undervaluing myself. I'm going to have to talk to my accountant. Talk to me a little bit about risk and how you sort of perceive risk in the space business. Is it like a risky thing to put money into? I mean, the thing is about space is like it's there. It's not going anywhere.
No.
There's lots of it. It's really useful. But so where's the risk?
The risk comes back to the business model, like who's going to pay for this, right? And unless you're able to prove that somebody is willing to pay something for the product that the company has, then the commercial validation doesn't exist. And if the commercial validation doesn't exist, the acquirer of this company, or indeed even if you go into the IPO mode, dare I say, there is no proxy to say that this is a successful company.
Right.
It just has some great tech.
Does some of this come down to faith? Do you just kind of get sometimes just have a bit of a gut feeling about whoever somebody, Nayen? I mean, like, do you think, I met this guy and he was just, he had a bag of magic beans, space magic beans, and it just sounded so good.
I don't think investors think like that. I think some founders do think, well, I've built something great. Of course I'm going to raise money.
Yeah.
This sector has historically been engineering-led rather than problem-led, and that's not enough for investors to deploy capital. I think you can't raise money on a promise unless there's some sort of rationale. And actually great businesses that have been R&D intensive have scale because they've really focused R&D on a clear idea of what the commercial proposition is. Yeah. And it doesn't make it any easier. No. They spent 5 years slogging away at R&D, but then that's when they've raised a Series A fund and they've gone on to scale up. So companies like Allspace or Orbex, they are UK success stories where they've spent a lot of money on R&D, but now they've come out the other side and they're commercializing their products.
Yeah.
So they are very grounded in what they're trying to do. That's not true of all startups.
That's interesting.
I think investment cycles, it's all about cycles.
Okay,
right?
Tell me about investment cycles.
You do get, times of bubbles. You do get times when it feels like a winter. And a good investor will know to hold and not invest during a bubble. Yeah. And know to invest during a winter.
Well, I remember doing some stuff about AI around about sort of 2008, 2009. Nobody was interested. And I was talking to this academic up in Edinburgh University who, developing that. No, couldn't get any funding. And now, of course, things have sort of changed slightly.
They've changed, but I think they've particularly changed for the whole LLM side of things, because that's kind of the aspect of AI that's had the most hype. So, you're doing something related to LLMs, then yes, everybody gets interested. But, actually at Amadeus, we're not looking at LLMs. We're looking at much more of the fundamental, what's the AI algorithm here that's applicable across a number of market sectors. So, the latest two investments in the fund, for instance, Safe Intelligence is doing AI verification and robustification of those models. And Ineffiny is looking at how we can really increase the training of these models very fast, right? This is not about large language models at all.
AI scares me.
I think it scares most people.
I think if it doesn't scare you, it should scare you. The speed of which it's going is just incredible. Every day there's like a new...
But isn't that exciting?
It is. It is exciting. It's exciting, but it's also like, it's so fundamental a technology. It's up there with kind of electricity as, sort of that level transformative, I think. But I think space has the potential to do that as well.
Yeah.
I heard a really interesting interview with Jeff Bezos actually talking about, let's get all of industry off Earth. And this idea of sort of manufacturing in orbit could be just completely transformative. Tell me where the smart money is.
We don't give investment advice for free.
Let's do a bit of insider trade. Oh, come on. That's why we got you here. That's why they're listening. They're listening because they want to know where to put their money.
Invest or where to
invest. Like what are the exciting areas then?
I think one of the areas that came up earlier as well, I guess, that we're really interested in is everything to do with space domain awareness and space debris sort of mitigation / collision avoidance and so on.
Keep space tidy.
Keep it tidy, know what's coming at you, know what's hovering near you.
Traffic management.
Yep.
We're good at that in the UK, I think, aren't we? We're good at kind of making rules and regulations and that kind of thing. Sort of built into our culture, I think.
Is it?
Well, we like queuing.
That's true.
That type of thing. And I think kind of coming up for rules of the road, I think we're quite good at.
I think space traffic management is slightly different from coming up for rules on road traffic.
Well, I don't mean road traffic, but I just mean, the sort of regulatory side of things, the sort of legal side of things, perhaps we're good at.
Yes, I mean, in part, right? Like there's always this whole debate of how far should regulation go?
Yeah, is
regulation the bane of innovation, right? So we should be careful about not over-regulating.
No. But I just meant
as well
coming up with this. I don't know, when they invented aviation, we came up with a set of rules so we don't all crash, and the same with space as well. We need to all have a sort of a set of agreed parameters and
yeah, but I guess in space it's an interesting one, right? Because I think regulation is a whole topic of its own. Low Earth orbit's getting crowded so quickly that I think regulation is almost trying to keep up with understanding all the different things that could potentially happen.
Yeah.
And so for us, I think from a space domain awareness perspective, it's and with all the other movements, right, from the various sort of funding programs that have come online now related to space domain awareness, I think there's quite a lot of, we feel quite bullish about that as an area to bet on, if you will.
Okay, yeah. I shall bet on.
I agree that because so our investment into Okapi is the one that's looking into space traffic management. So I think that's really a sort of in the LEO side. That's really interesting. But also, sort of how close can you actually get the satellite to Earth, and is there actually some advantage to that? Do you want to be able to, sort of look at resolutions for 1 square meter or 1 square kilometer, and that matters as well.
But Earth observation as an area, that's a kind of investable. That seems to be an investable.
There are applications. We still need to. I say that with caution, right?
Yeah.
We need to really work out who's going to be the end customer for this.
You guys are always so cautious, you investors. I want wild investors who just
Across the pond.
yeah. I want cowboy investors.
But I think with EO, it's worth mentioning, with Earth observation, it's worth mentioning that it's quite a crowded market, actually. There are lots of companies doing lots of interesting things.
It's one of those things we talk about a lot.
Yeah. But not all of them have figured out how to do it in a manner that only they can do it.
Okay.
And that is solving a big enough pain point. And so that the customer is not just purchasing it for this year, but will stay with you for many years, so that there's recurring revenue and you can scale. There's a few different interesting things that is happening within Earth observation, right? With hyperspectral imaging, for instance, or when you're overlaying radar with electro-optical and you have hyperspectral, when there are a couple of different layers of different kinds of imaging, right? And then you add the AI layer. That's where it becomes interesting to say, okay, now I've got all these different sources of data and I can tell you something that you couldn't have got from any single source, and I'm that much smarter, therefore. So there are like pockets that are very interesting.
But it's an interesting point, right? Like, I agree with you. That's a really interesting aspect. But the space tech then becomes an enabler.
Yeah.
It's not necessarily the one that's making the money, because if you're able to get all of those different data sources, yes, you need the satellites and to get those data sources, but the revenue is not going back to those who are running those satellites necessarily. The bulk of the revenue is going to someone who has that model and has the capability to pull all of that data together, which doesn't need to be sort of a space tech investment. It doesn't need to be a regular AI investment.
Right. I see.
So it wouldn't be like a satellite manufacturer.
Yeah.
It would be the layer that uses the data instead, right? And then that becomes more interesting as an investment for people.
We mentioned defense quite early on in this conversation, and as the world hurtles into more uncertainty, talking about terrifying things.
Yes.
Has that become, presumably investors are going to be keeping an eye on the big defense companies who use space?
Yes, I think, sort of right now the hottest topic in the venture community is probably defense tech. I'm seeing a lot of deal flow in defense tech, and nice, sort of back to the bubble. It's probably it's kind of heading a little bit perhaps towards that, and sort of that's geopolitical for you. The technology sovereignty is going to be key. For me personally, it's like it's interesting, it's important. But is now the time on that upward bubble, or do we wait a bit?
Interesting.
And dual use is civilian and defense is something that is talked about a lot right now. So technologies where there is a defense application, but a civilian application at the same time makes it more attractive commercially, I guess. If you take something like SATCOMs, satellite communications, you can use them obviously for direct-to-mobile comms for the average consumer, but you could also use it for communications in the field.
Well, wasn't GPS originally military? Wasn't that? I think
it was.
So
now the big
PNT
thing is
another
GPS denied.
Yeah. So in terms of the UK, Nayen, just how can we as a country make our space sector more investable? Do you think? What challenges are there? What gaps are there? What can we do?
So in the UK, the government is very generous with R&D grants. And that's been great. We should welcome that. I think that's given birth to a large.
When you say the government, do you mean this particular government, or
no, government in general? Government in
Okay.
general. So sort of we provide startups with a lot of R&D funding, and that's created this plethora of a new startup creation. But we need to try to get them to think more about how they commercialize that technology.
Yeah.
How can we incentivize them to think through to the commercial route and the customer, and really focus on getting out of the shed or the lab and out into the market and working with real customers.
And is that a problem? Yeah, I suppose we've covered a bit of this, but are the sort of engineers and the scientists, are they too in their heads and not thinking end product enough, or how?
I think that's true. Certainly in the space sector, it is very engineering led historically, and I think getting out of that mindset is absolutely critical, because for the reasons that Manjari and Shruti have described, they're not going to raise the amount of scale up capital they need to scale, and scaling is something that scaling is an issue that not just the space sector faces, but other technology sectors face in the UK as well. And
what does that mean in the real world, scaling? So if you're a small company and someone says, yes, you've got to scale, what does that look like? What does it even mean? I mean, get bigger.
Really, it's you've got a product that you think is that you can take to market.
Yeah.
You found some product market fit, so your customers actually want to buy it, and then you get to the point where actually you want to increase the amount you're selling to as many customers as you possibly can, and actually take reasonable market share. And you need a sufficient amount of capital to enable that. I don't know if that's a fair description, but
sounds good to me.
Sounds good. He's done his homework. It could also mean it would also mean new geographies. It could mean new revenue streams and new, so for instance, when he was saying defense and commercial, right? Like if you have a civilian use case, or you have a different commercial market you go after, that's all of that would constitute scaling, I guess.
It's essentially, increasing your revenues, how you go about increasing that revenues from your current base.
So let's imagine I'm a startup. What advice do you have for sort of startup space companies in terms of getting investment? What would you?
I think first work out whether it's the right type of investor for you. Do your homework. Most investors are very good at signposting on their websites what it is they do, and really work out why your technology is able to do something that nobody else is able to do.
Yeah.
And I come back to who's going to pay the money. Who is it?
Show me the money. Someone said that. I can't remember.
Who's going to pay for this product once you have it? It doesn't matter that you don't have the product just yet.
Who is your customer?
But who is your customer? Why are they going to spend money with you?
I only would probably reiterate the piece about know your investor, because I think there's just this sort of bubble or illusion that a lot of founders live in, thinking that the only way they can scale is by raising venture capital funding, right? And it may not always be the right funding for you at that point. It might be better to go away, take a grant, build a bit, and come back to a VC if they tell you you're a bit early. So I think there's lots of different modes of getting there, and allowing yourself to think of success in more ways than VC funding.
Yeah, so
will probably ensure that you do better for your own founders and your own company, than chasing after this sort of myth that is the only
just having
measure
one
of success.
having one
I
thing.
think the problem is media likes to sort of drum up the whole, this company sort of
has raised
raised so much and it's become a unicorn and everything. It doesn't cover the 100 other companies that didn't actually go down that path. And so there is this sort of, I need to raise. And it's a good ambition to have, don't get me wrong. I mean, if you didn't have that ambition, highly unlikely you'll be a venture backable business. So you need to have the ambition. But sometimes the path for space tech companies is not your every round right from the start will be venture. It could be other ways. So then get to a point where, sort of venture investors are backing you.
Yeah, and I think we also really do enjoy working with founders who are coachable, who will listen and who will come back to us. And we're very happy to listen to you again if you're able to tell us how anything has changed from the last time we spoke to you. So
it's not like kind of, this is it, you got one shot and then you've blown it.
Yeah, it depends on the investor. But I think with us, it's not. With a lot of investors we know and co-invest with, it's not. We're really, I think, people who are truly and sincerely looking to support founders to bring great innovations to market, will definitely give things a second chance.
Maybe they should go to the Satellite Applications Catapult.
Yes, they should.
Well, I mean, the only thing I would add is that Space is a dynamic ecosystem right now, and I think it's going to be like that for a number of years to come. And understanding where you fit into that ecosystem in terms of customers and suppliers is absolutely essential. And we do a lot of work in terms of understanding that. So we have something called the Space Capabilities Catalogue, which is essentially a map of the space ecosystem in the UK. And we have a ton of technical facilities helping companies build products. So 100%, if we can help companies get ready for investment, then absolutely we want to do that.
Come to Harwell. Thank you so much for coming back. It's been an absolute pleasure. Thank you for enlightening me. I'm now thinking about where to invest my my hard-earned wages.
Yes.
Thanks for having us.
Where's the smart
Thank you
money
for
going?
having us.
My pleasure. To hear future episodes of In Orbit, be sure to subscribe on your favourite podcast app. And if you'd like to find out more about how space is empowering your industry, visit the Catapult website or join them on social media.